Good evening. Hi, everyone, and thank you for making the time for yourselves tonight to join me in this live webinar. This is my first live webinar, hopefully out of many. And I'm just going to give a few, maybe a minute. So I apologize. Let's just leave some people to jump into the room because we are 2 minutes into the time already, but yeah, these things happen. I would just like to ask you, if you do want, you can use the chat button, and obviously leave the questions for later, or you can just put them in questions and answers. It should be on your right-hand side on the screen. This is the first time I'm using this platform. It's supposed to be a very good one, Webinar Jam. So let's see. So I think we can start. All right. So, Zoran, what's the catch? Innovations in risk cover and retirement planning that you won't believe are possible. This is the title of the webinar. So this is just a quick run up to what are we going to be doing. I'm just going to give you a brief intro about myself and about my career, which I think is important, as we don't know each other. Most of the people I don't know. I know one person. Then we're going to talk a little bit about local and offshore versus offshore, South African industry culture, offshore and its innovations. And we're going to touch on a new gold standard and some opportunities and possibilities that are presented to us. So this is a few pictures of myself in the early 90s. I came in 1993 to South Africa, just a quick one, with my missus. We got married. And 1 month later, we ended up in Mariston Hotel. And after that, I worked very hard. I changed a lot of work and a lot of jobs. I used to run the retail shops, restaurants, until 2001, which is actually my anniversary in September. I joined the financial services industry. And this is not to boost, it's just to give a part of my career. I started with the Hereford Group. I'm still part of the Hereford Group for 24 years, right now as an independent broker. In the beginning, I used to be a tied agent with Liberty. So you can see some pictures. The one on the left is with old Mike Jackson, the CEO of Liberty Life. On the right, there's also some awards with the Stanley guys. And on the bottom right is Michael Mindulakis, a very good friend, partner, and still CEO of Hereford Group. And the dear picture to me was one in the middle when I attained my Certified Financial Planning Award. So basically, I was excelling in sales. I was mentoring people. I was managing. But the most important for me was actually to get my knowledge to the full and to be able to help my clients the best way possible. So that's about me. Okay. So now what? I mean, I've spent all this time, but I left South Africa in 2013, tripping regularly with my licenses still on and office still in South Africa. I still received complaints from my clients about what's happening there. I still have my PA for 18 years. She's still there up and running, and nothing has changed. But seeing what's happening everywhere else and knowing that South Africa is only 1% of the world market, I start researching the offshore markets. So there is something that took me about 10 years, and that research included working with some of the companies, getting my account set up with Interactive Brokers, just checking all the policies, all the products, the culture, how it goes, what's happening overseas. And I established eventually some good connections. So you might say, now, why me if you're looking at somebody for the offshore? Well, I think the reason is that because I really know very well the South African markets. I have a long experience in that market. And I also know very well offshore market, and that is very important, which we are going to see a little bit later on. Okay, so local versus offshore, always the same story. And now we're going to be talking about industry cultures for a moment here. And this is something that I think you will benefit a lot if you had experiences like this, or if you didn't have, you'll probably find them very useful. In South Africa, we have a robust and big financial industry service, okay? I mean, there are over 100,000 insurance brokers, investment advisors, some great and qualified ones, no doubt about it. Investment companies have a big range of products, over about 500 funds available. So far, so good. But let's look at the risk and insurance companies first. Bottom line is the most products, specifically insurance products, were sold to the client without proper investigation of their needs. When I say their needs, I'm thinking about future needs until the end of their lives. The rule number one in South Africa is to find cheaper life cover and save client money. But is it true? Well, not really, because, you know, if you have the policy that is cheap, and I actually had a complaint from one of the clients about a month ago, and he's in the private equity markets, and he says, listen, Zoran, I need a life cover. 50 years old. There was a broker here who came and just changed the life cover and told me this is a cheaper one, and I didn't have time to actually look around about it. But it's usually the case, you know, people who are busy and who have assets and companies, they don't really have too much time to take a closer look at what they're signing. And obviously, it makes sense to just get a cheaper life cover, you know. And the reason for that is that our industry culture is not client first, I have to say, especially in the insurance business. It's company first, and the broker, and then the client. And that is actually the reason why we don't have some products that are actually available overseas and offshore, which I'm going to talk about later. But just look at one thing. You have a cheap life cover which increases every year by about 10 or 12 or 13%. What is the reason for you having that life cover? Let me mention some of the very important ones. So you want to leave enough liquidity. So when you pass away, your kids and your family don't have to do the fire sale, okay? Because the state duty and capital gain tax are there on the death, and the amounts are about 20 to 25% of your gross assets which you have under your name, minus the abatement of 3.5 million. CGT is 40% exclusion. Abatement is only 300,000. And the thing is, the estate has to pay that in estate duty has to be paid in 45 days. So people take life cover so they can leave that liquidity so that their families actually don't have to sell their homes in a fire sale, you know? They don't have to sell companies, they don't have to sell anything. That is one reason. Another reason is if they really want, in the beginning, they want to cover their income. And that's how the brokers sell those policies. So obviously, if something happens to you in the first 5 or 10 years, you know, you will get a payout. But what if nothing happens to you? If nothing happens to you, you will end up canceling that life cover because you will not be able to afford it. Do you have a dreaded disease cover there? Probably you took it, if you took it, because you do need it, okay? But what is the use of having a dreaded disease if most of dreaded diseases are happening from the age 60 onwards? And by that time, your life cover is so expensive that you're not able to afford. So this is just one of the reasons and one of the things that actually bothering me. And one of the biggest researches that I've done was around that. I mean, at retirement planning and investment, we have a very good narrative that says that at least 30 to 50% of your investment should be offshore. Okay, so that's fine. But what is offshore? I mean, let's go back to presentation. So, all right. in the global development, in a real offshore world, there are companies that have the culture which is client first. Okay, we spoke about South African industry culture, and this is now a client first culture, win-win. What does it mean, just quickly, which is very important? And that's one of the reasons, actually, I want to share this with you, so you have this knowledge, you're equipped at least with this knowledge. If you need the risk cover for those reasons that I actually mentioned, okay, why wouldn't you have the cover? Just imagine this: you have a life cover that you choose the payment term, so you choose 5 years or 10 years or 15 years. It's all according to affordability. You can choose the dreaded disease cover as well, included with that. And then after that term, and this is something that was really very difficult for me to understand, and it's probably going to be to you too, but you can re-listen to this, or you can set up an appointment and talk about this in a little bit more detail with me. So you have 10-year policy, you're paying annual premium of, let's say, $5,000, just example. After 10 years, you paid 5,000 times 10, $50,000. Now, that money is invested in a protected S&P 500 fund on New York Stock Exchange, but it's got a protection that doesn't go below zero. And that money actually grows for you. If you need it in retirement, you can actually access that money. Okay. So a lot of offshore companies have this cover. We also had them in South Africa, but not really like this. And they call them term cover. But what I'm talking about is not a term cover. And I'll tell you why. Because the term cover, after those 10 years, will stop. You will not have a cover anymore. You will have the cash amount, which is going to grow, and you can use that cash amount. You were covered for, let's say, $2 million life insurance for those 10 years. But as soon as the term cover finishes, you don't have life cover anymore. So these are just the things that people take, not really for the dreaded disease or stuff like that, but I mean, maybe to pay off the debt, 5-year debt or 10-year debt or a home loan or something like that. Maybe that's the reason for those term covers. But what product I'm talking about is after 10 years, when you paid your last premium, you don't have to pay any premiums until the end of your life. And you're still covered until the end of your life for the original amount of $2 million life cover. And if you chose the dreaded disease. So this is why I'm calling this a win-win. And this is why I'm calling these companies who make these products available, companies that put clients first. Because if you need something, you don't want to spend $100,000. And that's another thing, I have clients who spend 30 years with the life cover in South Africa, but they have nothing to show for. That's all the money that they wasted. It was very cheap cover in the beginning, but if you calculate how much money they spent, it's actually a lot of money. And all they can do right now is cancel it because they cannot afford it. Okay, so this is something that wouldn't that be great that I actually know that my family will get one day what I was paying for, and that I will also have some cash for myself in retirement. So there is a big difference in how the clients have been treated to these products. And that's what I'm saying, it's a win-win situation. Now, obviously, we're talking about offshore companies, and it's going offshore. So if you go offshore, where we can go? I mean, obviously, you can invest in offshore properties, which is very popular. It's one of the asset classes. You can invest in directly on stock exchange through your computer. I also have account with Interactive Brokers and Swissquote and a couple other banks. So I can do that. But then also on the top, you can see there's a hand with the family. That's a life insurance company. So you can also have life insurance products. These are just the basic stuff. Okay. Now, here's the thing called diversification and portability. So inflation hedging, security, All right, so let's go back. Now, everybody's been told to diversify offshore. Am I right? So that's like, everybody knows that. But what does it really mean, diversify your assets offshore, diversify your retirement planning offshore, diversify your portfolios offshore? Well, 99% of the time in South Africa, that means using the local companies to provide you with offshore portfolios. Okay? And that's not bad, as per se. That's actually not bad. But is it really offshore diversification? You know, we will see that in the future slides. Now, portability is a big thing. You see, if you have a direct offshore product, you can live anywhere in the world and have the bank accounts anywhere in the world. Maybe you follow your kids and you live somewhere overseas, you will be paid directly to that account. So these products I'm talking about are portable. Unlike South African retirement annuity products, for that matter, most of the products you actually in South Africa, you have to have South African bank account, and they're all coming first to your South African bank account and then to your offshore accounts. Okay. So portability for me in today's age is very important. We all know inflation hedging. I mean, the rand in the last 10 years just took a dive. Didn't took a dive, but it's like average. The decline against the US dollar was about 6% on a 10-year basis. So it's just like the same slope. So, I mean, if you do have a offshore, and especially direct offshore investment, then you're hedging against deflation, you know, because the rand dollar slip always follows the slip in inflation in South Africa. Security is a big one. Okay, so that's why I'm going to come and talk about a little bit about this slide. So we said, okay, we have South African products. We have everything in South Africa. We have cars. We have houses. I mean, we have maybe endowments, unit trust policies, life policies. We have retirement annuities, am I right? Maybe pension funds, provident funds, and everything is in South Africa. Now we say, let's diversify offshore. So as I mentioned, people then go and talk to the Old Mutual, to Discoveries, to the, you know, Alan Grays, and they look at the offshore portfolios and they say, okay, let's put 50 or 100% of one of my investment offshore. So at least I can put about 30%. The rule of thumb that all the brokers and the good brokers, there's a lot of good brokers in South Africa as well. That's what I forgot to mention. But the rule of the thumb is between 30 and 50% of your asset value should be offshore, because it gives you this balance and hedge against deflation, and it gives you opportunity if you want to leave maybe one day and stay with your kids or on your own somewhere outside of South Africa, then you have you can rely on offshore. But if we're talking about direct offshore, which is the companies that I have connections with and some other brokers probably do, but not a lot, versus the South African indirect offshore, this is a picture you need to see. So this picture here shows Liberty Life, shows Old Mutual, shows Sanlam, and on this side, there's some of the companies I have contracts and relationship with. I mean, Julius Baer, there's a Swiss quote. There's a lot of Swiss companies. There's a Manulife, which is a life company. There's a Sun Life, which is one of the biggest companies, insurance companies in the world. And now let's go first on the bottom in the credit rating. Now, if you look at the credit rating of Liberty Life, Old Mutual, and Sanlam, they basically have natural default BB, because, and that's not the greatest rating, because the country as a whole has a BB rating. All right. The only one is Old Mutual, who has a global rating, okay, from the global rating agencies, but the rating is also BB. Okay, so BB minus is already something that investors should not invest their money, because it's too risky. BB is on the verge of like, okay, you can invest, but there's a lot of risk involved in it. All right, and then you look on the left-hand side, Julius Baer, Manulife, and Sun Life, you will see A1, AA minus, A1, these different agencies, AA and A+. Now, this means that these companies have higher credit ratings, therefore they're less risky. But obviously, you need to have somebody who has the connections with them to actually invest or get a life cover or any product from those companies. All right. You have something that's called capital adequacy ratio, which means if the company goes down, how much money they have to give to their clients. The Sun Life has 152%, Manulife 137%, Julius Baer 311%, Liberty Life 140%, Old Mutual doesn't disclose that, Sanlam 166%. And then we have the assets under management. Okay, so these are the big boys here. Obviously Sanlam and Old Mutual the biggest, 143 billion, Old Mutual 82 billion, Liberty Life only 1.8 billion. Julius Baer is a very niche bank, so they don't take any clients, but they have 6.8 billion. Now let's have a look at the products that you can get, and that includes annuities and includes life cover, credit disease, everything I've been talking about. Let's look at Sun Life and Manulife. They're around about the same, and it's $1.6 trillion. All right, so if you compare that to South Africa markets and you want to know, okay, hedging, security, portability, credit ratings, this is what you have in front of you, and this is something that you need to know. I think one of the main points of this webinar is just to equip you with some knowledge about where we are. What do we think about our South African industry as a whole? And I know we think it's great, and it is great, but is it clever just to actually rely 100% on the products and companies in the South African market? So then we come to innovation. Okay, so this is another point, as I was talking about that life cover. I mean, this is purely innovative product. That, you pay the certain term. You can even take that for your children, newborn children. So it's very cheap policy. So you pay 5 or 10 years, and then you finished paying. And then your child has the life cover until the end of the life, has the dreaded disease until the end of the life, and has the cash value from your premiums that are growing exponentially. And by the time your child retires, you have 3 or 4 times more money than what you invested. That's number one. And number two, he will have a life cover. He doesn't have to go through medicals or anything like that, and to think about changing life covers, or, does he have any issues with health and stuff like that. No, you finish the whole of those 3 problems all in one. I think that's very innovative, and I think that's some of the products that put clients first. So yeah, I've been talking about life cover. The 2 major innovations. One is life cover. There's a different ones, but I'm talking about Manulife and Pan America and Sun Life, because I like to work with the biggest and best companies that have those products. Guaranteed annuity is another product which I would like just to mention. And basically all the stuff that I'm talking is new. We looked at how South African industry works. We looked at what is it that the clients actually get from the brokers. How does everything, how does the whole system of planning goes? And what is the problem there? What is the catch there? But life cover and guaranteed annuity is a product. For example, it's you can choose any currency you want. Well, about 5 hard currencies, and you can invest the money in 2 or 5 years. It's a lump sum investment, all right? And you can choose when you want to retire. The minimum time is 3 years. So, I have a product like that, so I can tell you, after 3 years, whatever amount I invested into that annuity, I will start receiving 6% guaranteed income in US dollars, because I chose US dollars, until the end of my life. Now, that's similar to guaranteed annuities in South Africa, just in rands, but not really, because here's another thing. That product is transgenerational product, which means after my passing away, my spouse continues receiving 6% of the capital until she passes away. And after that, my son continues receiving 6% in US dollars until the end of their life. They can also, I can surrender that policy at any time I want. It's not bound by any laws and regulations like in South Africa, South African retirement laws. My son can actually take the lump sum and says, I don't want to receive the income. But if you look at the properties, if you look at everything that we're investing in, 6% is quite a good return in the hard currency, especially in US dollars. And that is if I start using the annuity in year number 3. If I leave it for 5 years, then it goes to 7%. So can you imagine you put a lump sum for your child, which is 20 years old. You put the lump sum and you say, okay, you're gonna retire at 35 or 40. The amount of guaranteed withdrawal is going to be 20%, right? And it's not going to be only for him or for her. It's going to be for the family, and so for the spouse and for the children, and so forth and so forth. So I think that's really one of the great innovative products that we have in the direct offshore markets, which we don't have in South Africa. Same like a life cover. And yeah, I just mentioned the companies: Sun Life, Manulife, Transamerica for life cover, and guaranteed annuity is only Sun Life for now. And how to get access to them. So I personally work through Continental International Group. Continental International Group is one of the biggest brokerages. They have 3 offices in Dubai. They have offices in Geneva, in London. They have offices in India, in Hong Kong, in Mauritius, I forgot. And they have proprietary software and direct relationship with the Sun Life and Manulife, because you can't find a lot of brokers that actually can get you the products from Sun Life and Manulife and those biggest companies. Usually direct offshore, and I know from the people that live in Dubai, usually the companies that are sold through the brokerages that cover South Africa are Royal London 360, Utmost, that used to be Generali, and a few others. But they either have those term policies or the policies like in South Africa, and the innovation there is really not big. They're very similar, and the fees on those products, especially on the monthly products, are extremely high. So I'm not in that business, definitely. So how are we doing with the time? Half an hour, I think that's great. I didn't want to actually go so deep into detail of each things. I just, for the end, what I want to do is just to mention the new gold standard in retirement planning. So this is I think the last slide. This is the last slide, but it's connected to that one. I'm sorry. So how do you actually plan for your retirement? So my question is, when you have a broker or advisor, usually what happens, and it's what we used to do as well, so I'm telling this out of my experience, is we sit down with the client and we ask the client, at what age do you want to retire? And the client says, well, 55 is minimum, right? They say, well, I have to work at 60, 60 or 65. They give you the age, right? The next question we ask is, okay, how much money do you want to retire with? And they say, well, I don't know. That's a difficult question. I don't know how much money I will need then. And you tell them, okay, do the calculation in today's terms, and we'll include the inflation, and we'll tell you exactly how much lump sum you need. So then client looks and says, okay, I'm not going to have kids in a house. I'm going to have the bond paid off. And they do like 15, 20 minutes, maybe half an hour. They spend half an hour time just doing this simple calculation, and they come with the number. And they say, Mr. Broker, okay, I need 40,000 Rand a month if I retire today. Okay, by the time I'm 65. And the broker says, great, you see, we're going to do the financial needs analysis. I'm going to see your assets and what you have and what you don't have. And we're going to give you the plan, what is your shortfall and how much you need to invest. So you happen to have that retirement policy, and you say, okay, now I'm paying, my broker told me it's 5,300 Rand a month, and I'm going to be fine. And what happened next? The next is you put that in the shelf and you close the shelf. Okay, and you don't really connect to that policy. As a matter of fact, those are the policies that are first stopped, reduced, or canceled when the clients have the hard times. And I want to ask you why. Why is that? Why is it happening? Well, I think the answer is very simple. First, we don't retire fully. Okay. Secondly, somebody should ask you, what are your dreams? What did you dream since you were a small child? What do you actually want to do in your life if you have all the money in the world right now? And you might have different answers, but this is a homework for you. So I'm leaving you with this to do your own homework, because this is not something, but I'm just going to give you some of the answers that my clients gave me. You know, one of them says, I want to be a soccer coach, but it doesn't pay a lot. You know, I want to teach kids. I used to do it. And I mean, if I could afford that. Now, if you start creating a plan for that client, and you tell him, you need to sell one of the properties, you need to do this, you need to do that, and in 5 or 6 years, even before you're 55, I can create a plan in which you can start living your dream. Whatever the dream is. I used the example as a soccer coach. And when you review the portfolio with that client every year, we're looking, I don't have to say, okay, are you paying for the premium? What's happening? The clients are actually doing that themselves, because they actually want to achieve their dream. They don't want to do it for myself. They actually don't want to do it even for the sake of money, because it's good to have money, but what are you going to do with the money? You're not going to definitely retire and just go and play golf. That's going to last maybe a year or two. And a lot of clients then, according to statistics, get either a heart attack or they start becoming not so useful. You know, they feel that they're not useful to their communities, you know, and that's a problem. And the reason for that is because they were sold this retirement dream. You know, you work hard and you invest, and by the time you're 65, you then just go and drink and see the whole world. I mean, that's just one of the little things you will do. You can do that in 1 or 2 months, and then what? You know, what after that? Okay, so open a world of possibility. That's the slide in front of me. So I'm going to stop the slide presentation now, and I'm going to say that I really hope that this short, my first webinar, short webinar, was insightful, that it gave you some of the aha moments and tips. There will be more specific webinars or specific themes, and I think if somebody is very interested in something, you know, they can book an appointment. And I do have in a little thing here, it's called offers. Well, I'm using this platform first time, so I hope when we finish this, you will see the offers. And the offers is that the first 10 clients will have a free of charge consultation. And this is not a gimmick, and this is not to get anybody to book appointment. This is simply because I don't have a lot of new clients. I have retirees, I have people who are retired. And when I take new clients, I can't take more than 10 clients for next 6 months at least, because I spend a lot of time making sure that these clients actually have the proper the proper planning, the client is first at all times. So if that means we're going to meet 5 or 6 or 7 times, we'll also beat. You know, that's what happens. If you have another broker, if you have somebody else, I gave you tips what to look at and what to be very careful. Direct offshore and local offshore, why it's not 100%. Okay, and yeah, so I will have the webinars on particular themes, and also if you want to take this discussion further, as I said, you can book the one-on-one appointment. So, okay, is there any? Okay, super great. Andrea says, all right. Is there any questions? If there's any questions, you can put in a chat. If there is no questions, I will send you I will see how, but I will send you this webinar, the link, so you can look at it again. And yeah, thank you for spending an evening for yourself and allowing me to be part of your life and almost like in your home. And hopefully this was of value for you, which was my intention, because this is my purpose in life, to work with people and to actually try to help them the best way I can using my experience and my knowledge, which is in this industry and nothing else. So once again, yes, there is a question about the life cover, how is it possible? It is possible, yeah, that those products are available. It's Charles from Malanga. Charles, yeah, same. We can't spend time to go through the products, but if you're interested, then you must book appointment with me, and then we'll go more into detail. And I will have probably a webinar just specifically on that type of products. No more questions. All right. Okay. So that's it.